A little disclaimer, the material that we have prepared for this webinar is for informational purposes only and is not intended to provide or should not be relied for tax, legal, or accounting advice. You should consult to your own tax and legal experts for advice.
Good afternoon. I'm California State Treasurer Fiona Ma, and I would like to welcome you to this CalABLE webinar. As State Treasurer, I believe that CalABLE is an excellent financial tool for Californians with disabilities. For the first time, eligible individuals on means-tested benefit programs can save up to $100,000 without having their benefits impacted. CalABLE is a game changer, providing people with disabilities a low-cost, tax-advantaged way to save and invest for a better financial future. I am committed to promoting this program and for doing all that I can to continue to help people with disabilities strengthen their financial position to achieve a better life experience. Thank you for joining us today and for your continued support of the CalABLE program. I will turn things over to the CalABLE team to begin today's webinar.
Okay, thank you everyone for joining. My name is Thomas Martin. I'm the Executive Director of CalABLE. As Maria mentioned at the top, we have some very special guests from the Proxy Parent Foundation. Our friends will be chatting about a bit more detail about special needs trusts and all that great stuff in just a bit, so you can get a better sense of what a special needs trust looks like. But first, maybe let's talk about that relationship. So if we can go to the next slide, when we get this question a lot, I get this question all the time. What's the difference between a CalABLE account and a special needs trust, and which one is better? And that's not the best way to think about it. I have a special needs trust for my kids, and they each have their own CalABLE accounts. I have my own CalABLE account. They work really well together. So there's some things to think about, some differences between them. CalABLE can be a little bit easier to set up. It has some tax-free earnings, and there's a way you can receive gifts through it without it affecting income or assets for benefits like SSI. Special Needs Trust, on the other hand, there's no annual contribution limits. There's no maximum caps, so the sky's the limit for a trust. And in particular, you can receive things like large inheritances, other, large payouts. It doesn't have the limitations that a CalABLE has for things like the annual amount. But, so when you're thinking about it, if you can have both a special needs trust and a CalABLE account at the same time, that's really going to that's going to give you the most options. You can best protect assets for you or a loved one, while getting to do whatever you need to do with that money. That's really the right way to think about it. For a lot of people, the question isn't either or, it's both. It's yes, you want a CalABLE account and a special needs trust. So as we go through this presentation, I'll talk a bit about CalABLE. Then Proxy Parent Foundation will talk about special needs trusts. And you'll hopefully be able to get a sense for, what some of those differences are and how you can use them to kind of overlap and best support a loved one. So, but before we do that, we have a couple of polls that we wanted to run. So I'll hand it back over to Maria for that.
Yes, thank you. Thank you, Thomas. All right. To learn more about who is joining us today, we are going to be launching a couple of polls, some questions for you. You'll see the questions pop up on your screen in just a moment. Please select the option that best describes you. Here it is. All right, so we have a mix of participants today, which is great. The majority of you are authorized legal representative, which is great. Following to a parent or a guardian with and the following what is your own account owner. So thank you all for participating and for being here. I'm gonna stop sharing this. And I do have another question for you. This one is very straightforward. Do you have a special needs trust? Okay, there is a mix here. The majority of you answer no, you don't have a special needs trust. And that is actually very common, which is great that you are here today because we're going to highlight why you should have a special needs trust and also a CalABLE account. So it's more so like a split answer here. And if you're planning on setting one up, this is also very important information for you to learn about special needs trust. And then our last question, this one is also quick and easy. Have you attended to a CalABLE webinar before? Very straightforward. Okay, 60% of you have been to a webinar before. Thank you for being here. And for those of you joining us for the first time, welcome. We're so glad you're here. And thank you for those who have attended before. Thank you for coming back and continuing this learning journey with us. Thank you all for participating. And with that, I will hand it back over to Thomas.
Okay, so as I mentioned, we'll chat a bit about some CalABLE basics before getting into special needs trusts. So again, as we go through this, you want to think about how what the comparison is, how the two compare and how you can best use a trust and or a CalABLE account to get what you need done for your family. So if we can go to the next slide. So just quick overview. I'm sure, plenty of you have been to our webinars before, so you probably already have a sense of this, but what is CalABLE? So CalABLE is a savings and investment program for the disability community. So someone with a disability can open a CalABLE account, put money in, start planning and saving for the future, and be able to protect access to benefits in the future too. So on that note, let's chat about that. So as I'm sure many of you are aware, in order to qualify for benefits programs, a lot of those programs have very strict and often very, very low limits on how much money you can have to that person's name. The biggest disability program that comes to mind is SSI, Supplemental Security Income. SSI limits individuals so that they can't have more than $2,000 at any time while receiving SSI benefits. And $2,000 is just not really much for anything. You can't live independently effectively if you can't have more than $2,000. But that's where CalABLE comes in. With a CalABLE account, you can have up to $100,000 in someone's name while protecting access to SSI. It's also exempt from asset limits for other programs as well that also look at how much money you have at a time. So, for example, CalFresh food stamps, Section 8 housing, Medi-Cal is going to have an asset limit starting next year of $130,000. So CalABLE accounts are exempt from those asset limits. And when we get to special needs trusts, Proxy Parent Foundation, we'll talk about how trusts can also be exempt from that as well. So going to the next slide, let's quickly talk about who can have a CalABLE account. So this is one area where it's a little bit more limited than a trust. So in order to have a CalABLE account, there's two things you have to have in mind. So one is that you have to have an eligible disability. That can be you can determine if the disability is eligible if you receive if the person receives SSI or SSDI. In that case, that's easy to tell it's an eligible disability. You can also self-certify. So I don't get SSI or SSDI, neither do either of my kids. But you can self-certify as having a disability And we have some more information about that on our website, calable.ca.gov/eligibility. There's a link in the chat for you to take a look at. So that'll walk you through what are the eligible diagnoses. There's a big giant, actually two laundry lists of the diagnoses to take a look at, and plenty of details in there. So the other thing to keep in mind, so one, you have to have an eligible disability. Two, the other main thing is that the disability has to have started before the age of 26. So it doesn't matter how old you are today. Like my disability starts at birth, but I can still have a CalABLE account because even though I'm over 26, because it just depends when the disability began. So again, as of today, right now, December 10th, 2025, the disability has to have begun before the age of 26. But starting next year, that is going to be expanding. So if we can go to the next slide, starting January 1, anyone with a disability that began before the age of 46 can have a CalABLE account. So it expands from 26 to 46. It's going to be a huge growth in terms of who can have an account, the nature of their disability, all sorts of things. It's a much broader audience, whereas right now, a lot of the people we serve have disabilities starting from birth. We're going to be able to serve a lot more people whose disabilities started in adulthood, either from maybe an injury or a late onset illness, something like that. Um, some things to keep in mind, you don't have to receive benefits. Again, I don't receive benefits. And things like employment, income, those are not factors in whether or not you're eligible for a CalABLE account. Okay, so who can open the account, right? So that's who can have a CalABLE account. Who can open an account? So you can open an account if you have a disability. I open my own account. Someone can also open an account on your behalf, like I open my kids' accounts. And that works great too. The term we use is authorized legal representative. It sounds very complicated, it really just means the person managing the account. So I'm my kid's authorized legal representative, and I'll get to that in the next slide. But one more thing to keep in mind, again, the account owner is the person with the disability. So it is their account, it's their money. Someone can help them run it if they need it, but ultimately it belongs to them. So let's chat about authorized legal representatives. Who can be one? Again, this sounds more complicated than it really is. On the screen here are some examples of authorized representatives. This is the hierarchy. So it can be a guardian or conservator, a spouse, a parent like me, sibling, grandparent, someone with power of attorney, a rep payee, or really anyone requested by the account owner. So you can see it's very broad. There's a lot of people, and especially that the last catch-all is basically anyone. So when you open an account on someone's behalf, you just certify that yes, you're the most appropriate person to do it for them. We don't require documentation. I didn't have to submit a form or something proving that I'm my kid's parent. I just have to I have to check the box and have to certify under penalty of perjury that yes, I am the best person to open the account for this person. So there is more information on our website. We actually have an FAQ specifically about authorized legal representatives. We also have some information about authorized users. So this is a relatively new thing. So there's the authorized representative who is managing someone's account, but you can also add authorized users to have access to the account as well. So what that means is that you can have, for example, two parents can have access to an account. Or if someone with a disability wants someone to help them manage the account, but not completely take it over, they can give them access. Maybe you give it access to a financial advisor. It's really, you can decide who should have access to the account and what level of authorization you give them, whether it's view only or we're making contributions, whatever that might be. You just choose what's going to be best. So for everyone, everyone's in a different situation. What's best for that person? What's best for the person with a disability? So in the chat, there's a link to an FAQ on that as well. So a bit more information about giving access to others. That's a brand new feature from about 2 months ago, so we're really excited about that. Okay, so those are the representatives. Let's chat about how much you can put in it. And this is a very important point when distinguishing CalABLE from a trust. I already mentioned before the number $100,000. Um, if the person with the disability receives SSI, they can have up to $100,000 in a CalABLE account. And so for a lot of folks, that's the most important number to think about. $100,000 total in the account at any time. So if you go above it, that could affect your eligibility for SSI. You could spend back down below to stay under 100,000, however. Now, if you're not receiving SSI, you can save up to 529,000 total. So it's a pretty big jump. So if you're not worried about protecting SSI, you can have $529,000 in the account at any given point. And then the last numbers to think about is the annual limit. So for 2025, you can add up to $19,000 into a CalABLE account for the calendar year. So it meaning if you open an account today, you'd have 3 weeks to put in $19,000 if you wanted to max it out. You can put it all in at once. Next year, we're excited that the limit is going to increase to $20,000. So you'll be able to add $20,000 next calendar year into the account. So again, $19,000 this year, $20,000 next year. Over multiple years, you could go up to 100,000 and protect SSI, or you can keep going beyond that and have up to $529,000 if you're not worried about SSI. Okay, so I mentioned briefly before about gifting. So anyone can add money to anyone's CalABLE account. You set up a gifting page. You can send it to friends or family, whoever. They can go directly into the CalABLE account, into that gifting page, and put money right into that person's CalABLE account. It doesn't count as income. It doesn't account against them for things like SSI. Some benefits programs like SSI, if you give someone money, like to help pay rent or something, that can count as income sometimes. It might count as a resource, but not if you put it directly into a CalABLE account. So it's a way that friends and family can support someone with a disability without making it harder for them to qualify for benefits. And it's really easy to do. It takes like 30 seconds to set up a gifting page. Okay, and then so there's gifting. So let's talk more along those lines. Who can put money into a CalABLE account? So first of all, a beneficiary can. And some things you want to think about. So if I have my own CalABLE account, I can put my own money into it. Anything I earn from work, that's still earnings. So just because I put it in the CalABLE account doesn't mean it's not income. But I can put that money into the CalABLE account. It'll be protected if I ever were on benefits. And if I'm working, in some cases, you can add beyond the standard annual limit. We have some more information on our website that's called Able to Work. There's some details on it, so it's for specific scenarios. Now, the other thing, so it's not just the beneficiary, anyone else can add money. So again, we have the gifting page. That's the easiest way to do it. The friends and family can add money through the gifting page, and it doesn't count as income again. And it also won't affect benefit eligibility. Now, regardless of wherever the money's coming from, any of these different sources, you can have up to $19,000 in the CalABLE account. Added in a calendar year into the CalABLE account for this year. So it can be a mix of money coming from the person with disability and friends and family. It doesn't matter where it's coming from as long as it stays within that $19,000 limit. But again, if someone is working and they have disability, they may be eligible for able to work to save more. There's a link in the chat with some more details on that and who is eligible. Okay, and then so you put the money in there. So now what? CalABLE has some options for you. We have 8 different investment options that you can pick and choose from on how you want to save and grow your money. So we have one option that's similar to a savings account. It's FDIC insured. We sometimes call it the cash option. And then we have 7 others that are a mix of stocks and bonds and those sorts of things that are tied directly to the market. Um, so you can pick and choose. You can mix and match whatever is best for the person with a disability. And the more the earlier you can start saving, the more opportunity you have to be able to grow what's in that account. We do keep the fees as low as we can. We are a state program, so we're not looking to make a buck. So our fees right now are $30 per year, plus a small percentage of what you have invested in the account. And we have some more information on our website in our program disclosure statement. But one more thing to keep in mind, and this is the really big draw, like it's the big draw for me, for my own personal CalABLE account, is that you don't pay any state or federal taxes on anything you earn in the account from the different investment options. So as your account grows, as you grow earnings, you don't have to pay taxes on it as long as you use the account for qualified expenses, which we'll get into in just a moment. But before that, we have we have another poll for you. So I'll hand it back to Maria.
Thank you, Thomas. Yes, we have one last poll for you. We would love to know, what are you saving for? Just take a moment to respond this question. We would like to know your goals. Okay, great responses, everyone. Thank you all for sharing your answers. I can see there is a variety of goals within our audience today. Some of you are saving for retirement, which is great. Think about the future. A lot of you are also thinking about saving for their first home, which is amazing. It's a great milestone to have, or goal to have. Some of you are saving for education, technology, accessible vehicles, recreation, which is great. All of these goals are great. I just want to let you know that, your goals and your dreams matter, and CalABLE can help you achieve those dreams. And with that, I will go ahead and close out the poll and hand things over back to Thomas. Thank you.
Thank you. Thanks everyone for answering our poll. It just helps us get a better sense for what folks are planning for. So I mentioned before about qualified expenses, and that was the purpose of the poll to ask you some, what you were thinking about. All those things are good examples of what you can use a CalABLE account for. So qualified expense sounds more complicated than it really is. Really, the thing to think about is this sentence at the top. What you use the account on needs to help maintain or improve the health, independence, or quality of life of the person with the disability. So as long as that's what the expense is for, then it's almost certainly going to be an appropriate expense. It's going to count as a qualified expense. So some examples of that are education, housing, transportation, food, recreation, legal fees. There's a lot of things that you can use it for. Really, as long as that expense was benefiting the person with the disability, then it's probably going to be an appropriate expense. One thing I will highlight is housing. So you can use a CalABLE account for housing expenses. If someone is an SSI recipient, the housing expense must be paid out in the same in the same calendar month that it is withdrawn from the account. Meaning, if you were to take money out of a CalABLE account and deposit in your bank account so that you can do a transfer or write a check or something like that, if that was your plan to pay the rent, you would have to do all that in the same calendar month. If the money is left over in the account at the end of the calendar month, and then is used for housing expense in a future month, that can affect your SSI benefits. So it's something to think about that only applies to SSI recipients. I apologize, it's a bit complicated. However, that said, you can still use the CalABLE account for housing related expenses, which and when Proxy Parent Foundation is on to talk about special needs trusts, we can talk more about how housing expenses factor into that as well. Okay, and then so that's what you can spend it on. How can you spend the money? So there's a couple of options. One is you can transfer the money to like another account, to like a bank account, for example. Um, you can also have a check made and mailed out to a bill pay recipient or to you, whatever you need that to be. Um, you can also, what I think is by far the easiest, most convenient option, you can also get a prepaid card. It's a Visa card, and it's attached to the account. You stick money on it, you decide how much money you want to have on it, and then you can go use it wherever you can use a Visa card. Um, it's there's some great, really convenient features about it that help set it apart. One is that you can have a card. Let's say you're supporting someone else with their account. You could have a card for yourself and that person. They could have their own card. You can set limits on where it works. There's a link that's tied to the sorry, there's an app that's tied to the card, and you can decide what types of stores you want it to work at, or how much money you want you want to limit can be spent in a given day. Things like that. You can set up these parameters. You can also get notifications whenever it's used. And what's great about it is that it helps the person with a disability be more independent. If they need someone to help them, make sure they're still spending, wisely, but you still want them to be able to go to the store and make their own decisions. The prepaid card is perfect for that. We have account holders. That's basically how they're using it. It's to let the person with the disability have more freedom, more independence, but making sure there's still some guardrails on it. And we're excited to say that starting next year, starting in January, you'll be able to use the card to withdraw money at, say, an ATM or like cash back at a register. So if you need cash, you can use it. You can use the card for that as well. The cash you withdraw would still need to be used for qualified expenses, so you can't just you can't just spend it on anything. But it would add a lot more flexibility for the account holder. Okay, and then a couple more things I'll get into before we switch over to special needs trusts. What happens? We get this question a lot. What happens if the beneficiary passes away? So, if the account holder were to die, there's some things to think about. One is that the account can still offer protections even after death. You can still use the account for any outstanding expenses. So if there's anything that was outstanding, an unpaid bill or something from when the beneficiary was alive, that's still an appropriate expenditure. You can also use it for any funeral and burial related costs. That's specifically allowed by law. Um, and at the time of so you can continue to use it that way. At the time of death, um, once we find out that the person has died, we will ask for documentation. There's some information on the screen. We also have more details on our website you'll want to take a look at. That so to make sure we can accurately process the account. But that's to help get started on how to manage the account after death. Um, but there are some other things to keep in mind. So if we can go to the next slide, CalABLE accounts are also exempt from Medi-Cal estate recovery. Um, so in most cases, I should say. There are specific instances where a CalABLE account wouldn't be exempt, and that's what you see on the screen. So if every single one of these categories applied, then someone wouldn't necessarily be exempt from estate recovery. So if the account holder received Medi-Cal and they were 55 or older at the time of death, and their estate exceeds the threshold for probate, which is $200 to $8,850, and they received specific care services, so skilled nursing care or home and community-based services care, for example. And there's no surviving spouse or domestic partner or child under 21 or child with a disability. If all four of those are true, then there may be a state recovery. However, if any one of those isn't true in that case, then Medi-Cal would not collect against the estate. And so that offers a great protection because a state recovery, in many cases, completely wipes out someone's estate at the time of death. But in the case of CalABLE, for the vast majority of cases, the account would be exempt. And there is information on the chat for a bit more details from Medi-Cal directly. So that's one other thing to think about at the time of death. Another thing to think about is before that is planning. So you can designate a successor beneficiary. Um, that now, because of restrictions of federal law, it is limited. It would have to be a sibling, a step sibling, or a half sibling. But you can designate each of them to be the beneficiary of the other's CalABLE account. So if one were to pass, money in their account could be transferred directly to their sibling. Um, but they do have to be designated prior to the time of death. Um, but it is very easy to do. You can do it online in the portal. You can also fill out a form. I did this for my kids. It really took just a few minutes just to set it up how I wanted it. So those are all some things to think about if the beneficiary were to die. One thing I will say is that we're not lawyers. We're also not tax professionals. So you'd want to consult an attorney, a state attorney, and or a tax professional to help guide you through what the implications of each of these pieces would be. Now, so the last thing I'll mention on this is that at the time of death, if there's any money left in the estate, after qualified expenses, after estate recovery, after whether there's money given to a successor designated beneficiary, any remaining money would be subject to would likely be subject to taxes at that point, taxes on the earnings. But again, you'll want to talk to a tax professional about what that would look like and how that would work. Okay, one last thing before getting to our special guest speakers is how do you get an account? So for those who don't have a CalABLE account, how do you open an account? You go to our website. The website is calable.ca.gov. There's a bunch of information on the site, a bunch of links you can go to, but there's a big gold button that says open an account. If you click there, you can get started and open your account. Takes, 10, 15, 20 minutes and you can be started. And you can open it in 20 different languages, but besides English, you have Spanish, Chinese, Korean, Japanese, a bunch of other languages. And then if you want to get a hold of us, you can give us a call. We can go to the next slide. We have a call center that you can contact that has up to 200, more than 240 languages. You can give them a call. They can help you out. The phone number is 833 CalABLE. If you give them a call, they will help. And you can also sign up for emails and newsletters and learn more about our future webinars by scanning the QR code on the screen or by going to our website. We have a link there to join the newsletter. Okay, I've said enough. Let's turn it over to the Proxy Parent Foundation. So if we can have you come on the screen and introduce yourselves. But before we get started, I want to thank you for joining us. This is really really helpful. That I'm really appreciative that you're willing to join the webinar and let people know more about trust. And more about, and we can work together to help people know more about how well CalABLE and Trust work together. So take it away.
Thank you, Thomas. Thank you so much. And Good afternoon, everybody. Thank you so much for taking time out of your holiday schedule to spend with us and learn about CalABLE accounts and special needs trust. My name is Carol Larkin. I'm the Director of Client Relations with Proxy Parent, and on the call as well is our Executive Director, Carmen Bowen. Carmen, if you want to say hi.
Hello, everyone. Thank you so much for having us as your guests. We are looking forward to sharing our knowledge about special needs trusts.
Wonderful. Next slide, please. So our presentation is entitled, Who Will Care When I'm Not There? Next slide. So Proxy Parent Foundation is a nonprofit organization dedicated to assisting people with disabilities by safeguarding their access to public benefit programs through the creation and administration of a plan of California special needs trusts and providing family-like personal support services. We were founded in 1990 by parents of children with severe mental illness who really wanted to provide a wraparound approach to the creation of special needs trusts. So on one hand, you have the financial piece of this, which is fantastic to care for the loved one, but they also wanted someone who could be on the ground looking after their loved one after they had passed on. Next slide. So a special needs trust is an estate planning tool that allows its beneficiary to shelter assets and protect qualification for certain government benefits. A person can have a standalone special needs trust or join a master pooled trust like Proxy Parent Foundation. And it's important to establish a special needs trust because it ensures that any inheritance or financial gift does not disqualify your relative from public benefits like SSI or Medi-Cal. Next slide. So there's some key differences between a standalone special needs trust and a master pool trust such as ourselves, and I'll kind of review them on this table. First and foremost, with a standalone special needs trust, you would go to an attorney who would draw that up for you. So it's the structure of it is individually drafted and tailored to that beneficiary. With a master pool trust such as Proxy, the beneficiary joins an existing master pool trust with standardized terms. In a standalone special needs trust, the trustee is chosen by the family or the grantor, whomever that may be. So that could be a family member, a friend, or a professional fiduciary. With Proxy Parent Foundation, the organization is the trustee. So we make the decision, specifically our executive director. However, we do really value family input and we welcome it all. The management style for a standalone special needs trust is, again, highly individualized. The trustee can adapt distributions and investments to family preferences and the beneficiary's unique circumstances, whereas in a master pool trust, there is standardized administration. We follow uniform policies for all of our sub-accounts. The costs for a standalone special needs trust tend to be a little bit higher than a pooled trust. So there's a higher upfront legal fee for the custom drafting of the document, as well as any ongoing trustee fees that might be incurred by the person managing the trust. With Proxy Parent Foundation, there is a lower entry cost with a flat enrollment fee and annual administrative fees. And just to help conceptualize this a little bit, the average amount of money that the average cost for a special needs trust for a standalone is about $5,000, whereas our enrollment fee is $1,000. With a private institution, there might be some asset minimums that you would have to observe. So if you do not meet that minimum, they would not take on the trust. With Proxy Parent Foundation, there is no asset minimum or maximum to join. And lastly, something that is similar for both standalone trusts as well as any trust within a master pool trust. With our first party trust, there is Medi-Cal payback. With third party trust, there is not Medi-Cal payback. Next slide. So how can a special needs trust be used? So it's meant to supplement rather than supplant government benefits. It ensures the beneficiary is able to benefit from both funding sources continuously. It can be used to pay for extra medical, education, recreation, and social services not covered by public benefits. Some examples include purchasing a new computer, paying an internet bill, an AAC device, cell phone, personal need items, etc. It can be used to supplement food and shelter in specific instances. However, any restrictions imposed are done so by those benefit agencies themselves. Next slide. So there are two types of special needs trust. There is a first-party trust and a third-party trust. The first-party trust is funded with the disabled person's own assets, such as a personal injury award, settlement, or inheritance. So the person already has the money. It may or may not require court petition by a grandparent, parent, or legal guardian. And again, when the beneficiary dies, any remaining funds are subject to rules that require the trust to repay the state for any Medi-Cal benefits previously received. In a third-party trust, someone other than the beneficiary provides the assets, such as a family member or other concerned party. In this instance, when the beneficiary dies, no Medi-Cal payback is required. Instead, the grantor designates who receives the remaining funds after a 25% retention by Plan of California as a nonprofit trustee. And I think this is why attending webinars like this is so important, and this future planning is so incredibly important, because with a third-party trust, you as the grantor can still have a little bit of say of what would happen to your money if the beneficiary passes away unexpectedly, whereas in the first-party trust, we would have to repay the state with those funds. Next slide. There are three ways that we provide disbursements for our beneficiaries. The first are we can write checks. So checks can be cut on a recurring basis or occasionally as needed. Some great examples that fall into this disbursement type are a recurring phone bill, reimbursing a trusted adult for any purchases that they might have made for the beneficiary. We also have the option to issue a TrueLink card, which is a prepaid Visa card that can be used for more flexible spending. Some better examples of how to use the card would be needing a haircut, if you need to go shopping for clothes, more day-to-day purchases, as well as we are able to fund a CalABLE account. So this is a really great marriage of CalABLE and special needs trust. So we can make periodic transfers into a CalABLE account, especially if the person already has the prepaid Visa from them, which again would allow for more of that flexible spending. Of course, we would have to observe those annual contribution limits. Next slide. The Plan of California Master Pool Trust accepts first and third party trusts. Again, we provide the trustee as the organization, whereas conversely, in a standalone trust, you would provide the trustee. Our funds are pooled for better investment returns and lower management fees, but a separate account is maintained for each individual beneficiary. So you don't have to worry about accounts commingling. Whatever you put in for your loved one is solely for your loved one. Beyond that, we welcome family involvement in all matters. We love when we can work with our families, but we are also an option when there might not be a lot of extended family. Next slide. The Plan of California Master Pool Trust is open to all disability types, all ages, and we work in all of California. So, we can go back, please. So as long as the beneficiary is within the state, they can move north, south, central, and we will still work with them. Next slide. Our personal support services are really the heart and soul of what our organization does. So like I mentioned, the financial piece is one part of it, which is fantastic to protect benefits, but this is the heart of what we do, giving parents peace of mind that someone is going to look after their loved one in the same way that they were doing so. So we hire and supervise personal support specialists, as we call them, to work directly with our beneficiaries in their local communities. Some of those service examples include finding and maintaining housing, applying for and maintaining public benefits, obtaining and maintaining medical and dental care, developing and maintaining friendships, recreation, and quality of life. We also help them with life skills such as budgeting. Our personal support specialists, or proxy parents as we call them, step into the shoes of a loving family member and act as a caring advocate and friend. Next slide. So why Proxy Parent? It's a private solution to a public dilemma, excuse me. It provides services more efficiently and cost effectively than can be provided independently. It marries the expertise of the business world with the compassion of the nonprofit world, and it's a model of what dedicated community members and disability advocates can accomplish. Our personal support services will give you the peace of mind and help you answer that question, who will care when I am not there? Next slide. In addition to what other pooled trusts may offer, the Plan of California Master Pooled Trust offers enrollment without court approval. You join simply by signing a joinder agreement. There is no asset minimum or maximum to join. We have 3 fantastic partners that we work with to provide this service. So our investment management strategy is provided by Lindbrook Capital based in Los Angeles. The custodian of funds is Fidelity Investments. And our trust agent is ML Management. And what's really special about this is that it provides a really good system of checks and balances. So no one entity can do something with the account without the other 3 entities also having to sign off on it. So it's a lot of protections for you and the beneficiary as well. Additionally, our personal support services, we are the only pooled trust in the state that does this. If so, that is a bonus. But if you were to want a similar service at another organization, you would have to do all of that sort of legwork. Next slide. We also offer something that we call our pay-as-you-go program. So for families who have set up a trust with us and want to receive personal support services while they're still here with us, they have the option of tapping into that. So families who are seeking to transition their disabled loved one into a new housing arrangement, if there is a time of crisis, or simply respite. We get calls from parents who tell us, we just want to go on vacation and we want to know that someone's going to check in on my loved one. That is an option for our families without having to fund the trust quite yet. The pay-as-you-go program makes it possible for a beneficiary to establish a strong rapport with their personal support specialist while the grantor is still alive. Next slide. And so I'm just going to do a little bit of an overview on our enrollment process. So to join Proxy Parent Foundation, there is an enrollment fee. You would send that in, and then we would complete some necessary assessments and paperwork, the paperwork including the joinder agreement. You would complete that and return that to us, and then that is how we would create your sub account. We would provide you with examples of bridging language, as there does need to be something input into your will or your trust so that your executor of your estate knows how much to fund your Proxy Parent Special Needs Trust. Once the paperwork is filed and the sub account opened, the account remains open until the day that it is funded. It does not incur any fees while it is open. So if you opened it today, but it wasn't funded for 30 years, there's nothing accumulated. The annual fees that go along with the trust start the day that it is funded. Next slide. And just to review a little bit of our annual fees and costs. So once the trust is funded, there are 3 main ongoing fees. There is the annual trust maintenance fee, which ranges from 1.25% to 1.75%, dependent on the trust balance. This is assessed quarterly. So naturally, as the trust is kind of spent down, the fee itself kind of goes down as well. There is an investment management fee, which is 1% of the trust balance. Again, this is also assessed quarterly, and a flat annual fee of $285 for tax preparation. Our personal support services are $85 an hour plus mileage and travel time, and there is a 15% administration fee based upon the hours provided. So this is based on the hours, not the balance of the trust account. Next slide. And so as you're considering all of your options for your loved one or yourself, some things to consider as you're debating or, considering your special needs trust, consider who will be the trustee. If it's a family member or someone who is not in the field, will they know how to invest and manage the funds? If the trustee is a family member, will it cause any problems? I would say about half of our calls are current trustees of special needs trusts who are wanting to transfer the trust to our organization because it proved to be too much for them. What sort of oversight will the trustee have? Does the trustee know how to serve the needs of the beneficiary? So this goes into times of crisis. Do they know about the resources, things, benefits that they might be entitled to, just everything that the person might need? Will the trustee be able to keep up with changing government benefit regulations? We just saw even in Thomas's slides, things that are true right now are going to change in January, so you have to keep up with it. And will the trustee understand the tax requirements? These are some of the common questions that we get when we're doing calls, intake calls with families. So please consider them. I hope they are helpful to you. And with that, that concludes our presentation, and I believe we will open up to questions. Next slide.
Carol, great job. I want to make sure that everybody sees this is how you can contact us. ProxyParentFoundation.org is our website. Our phone number, 714-997-3310. And our email, info@ProxyParentFoundation.org. Or Carol's email is clarkin@ProxyParentFoundation.org. So we're there to help you and answer any questions that if you had some that we did not address today, feel free to contact us and we will be happy to do so.
Okay, thank you so much. Really appreciate it. Thanks for all those great details. We're gonna do some quick reminders and some recap, and then we'll see how much time we have left over for Q&A. So. First things first. So, like I mentioned before, at the very beginning, hopefully what folks can get out of this is some of what makes CalABLE accounts and special needs trusts a bit different, but then also how how they help, how they overlap, how they work together. So we have a couple of slides just to kind of do a quick recap of some of the differences between the two. So first of all, eligibility. Who can have a CalABLE account? Anyone with a disability that began before 26 or next year before age 46. Whereas for a special needs trust, it varies if it's a third-party trust or first-party trust. Either anyone with a disability for a third-party trust or for a first-party trust, anyone under 65 with a disability. Setting up the account, CalABLE account's pretty quick. Generally, anyone can just kind of do it. It's not too much to it. Special needs trust, as Proxy Parent Foundation mentioned, it can take a bit more work. If you're going for a private trust, you're almost certainly going to want an attorney. But you can also work with a pooled trust that has some built-in resources and can make that process much smoother. So it really kind of depends what you're looking for, but you have some options. Ownership of the account. So for CalABLE account, the person with the disability owns the account. They can, however, have an authorized legal representative manage the account for them. They can also have an authorized user help them manage their own account, whatever's going to be best. Whereas for a trust, it's a more specified process. There's a trustee who's managing the trust, and that person decides how the money's spent. Again, the details of that really depends on the trust itself. Eligible expenses, for both, it can be pretty broad. There's a broad range of what you can use either a CalABLE account or a special needs trust for. One thing to keep in mind, one difference is for special needs trust, if you use that funding, if you use that money to pay for housing related expenses, it can affect benefit eligibility, particularly thinking of SSI. So it can be counted as a resource. But CalABLE account doesn't, and one thing that some people do is they use the CalABLE account to pay for housing, rather than the trust. And if they have money from the trust, they can move that into the CalABLE account. So, you can help protect the money and not have account against income, not have account as income against benefits. Who can add money into the account? For CalABLE account, it's really anybody. Friends, family, complete stranger. It doesn't really matter who. Anyone can add to someone's account. For a special needs trust, it's a bit more defined and it varies on the trust. It can be anyone except the person with a disability for a third-party trust, or for a first-party trust, the person with a disability, conservator, guardian, and that's a little bit more detailed. And does it protect benefits? The most important line, yes, it does. CalABLE account, special needs trust, both of them can help you protect benefits, and they can work together to help you protect benefits even better. And then going to some of the financials, comparing some of the financials. So, as Carol had mentioned, it can be big expensive to set up a special needs trust, especially if you go the private trust route. If you need an attorney, attorneys are not free. So that's something to think about. There can be a larger startup cost. CalABLE account, it's a relatively low cost to get the account open. Contribution limits. This is probably the most important distinction between the two to think about. Well, one of the most anyway. CalABLE accounts have limits. So you can only, again, for this calendar year, you can add up to $19,000. Over multiple years, you can have up to 100,000 and protect SSI, or 529,000 if you're not worried about SSI, if you're protecting other benefits, or you're just not trying to protect any benefits at all. Special needs trust, sky's the limit. Put as much money as you want, whenever you want. That offers great flexibility for things like either if just someone simply has more money, congrats, put in a trust, or if you're expecting a large or receive a large payout, life insurance, an inheritance, something like that. Special needs trust is probably where you'd want to put that money, because the CalABLE account, you'd be limited to that annual limit. And then Medi-Cal estate recovery, Medi-Cal payback. So Medi-Cal won't recover against a CalABLE account in the vast majority of cases. For a trust, only a first-party trust would have to pay back on Medi-Cal. And then investment options, this varies quite a bit. So a CalABLE account is straightforward. You can go to our website, you can see our investment options. We have 8 options to pick and choose from. It's really up to the account owner or their representative to choose how they do it. For a trust, that very much depends on the trust, on who's managing the trust, on what options are available. It really does vary. So you'd want to talk to either if it's a private trust, you'd want to talk to the attorney and determine how to set it up. If it's a pooled trust, they already have kind of a built-in process, so you just want to talk to them. And then taxes. So this is the other kind of big difference between the two. Special needs trust earnings on a trust are taxed. CalABLE account earnings are not taxed. As long as you use it for qualified expenses, you don't have to worry about paying taxes on what you earn, which really helps with growing the funds in the account. So there's a lot of areas where they work really, where there's some differences. There's a lot of overlap, but there's some areas of difference. And what you'd really want to think about is how can you benefit from having both of them. So if you can go to the next slide. So you want to think about how you can combine the two. CalABLE account has limits on what you can put into it. Special needs trust doesn't. It's a great place to put larger amounts of money. CalABLE account, however, has no taxes on earnings and has a bit more flexibility on, for example, on housing related expenses. So really, you want to think about how you can use the two combined to protect assets today, protect potential assets in the future, and keep benefits intact. They work really well together. Just think about how you can use the both of them. I think that's the best recommendation that I can give. Some folks, again, you can take money, as Carol mentioned, you can take money from a trust. You can put it into a CalABLE account, and then you can pay for, again, you can pay for housing expenses, or you can just benefit from the tax-free earnings. And you can keep it in the trust and let the trust keep growing and adding onto it as well. Use them both. Okay, so that's I know that was a big recap, but I thought it was worth walking all the way through it again. So a few more things, and then we'll get to Q&A. First of all, again, $19,000 is the limit for this calendar year. So if you haven't reached that yet, you do have some time. You'll want to submit any contributions, as you can see, by 1 p.m. on Tuesday, December 30th. That would help you stay within the 2025 calendar year. That's for electronic. If you're submitting a check, you have to make sure it is in by December 31st. So don't just mail it by then. It has to actually be received. So you're gonna want to give yourself some time. Otherwise, it would count. You could still, the transfer would still work, the deposit would still work, but it'd count for 2026. And then again, it's $19,000 this calendar year. If you qualify for able to work, it could be $15,060 in addition to the standard limit. Okay, and then next month's webinar, again, eligibility is going to expand next year. So our next webinar is really going to be a lot more of the CalABLE 101, a lot of the basics. How do you open an account? How does it work? So feel free to join us then. That webinar is going to be January 28th at 2 p.m. And there's a link in the chat for where to sign up. And then we have another survey for you. So after the webinar, you'll have the opportunity to fill out an anonymous survey. In there, it'd be great if you put in a bit more information about you, any feedback you have. If there's any outstanding questions or something, you can feel free to add that as well if we miss something. There are a lot of questions in the chat, and there are only so many of us, and most of us are talking at some point. So it is very hard for us to get through the chat. So if we miss anything, you can add it in there, and we'll do our best to respond to you. And then last things are legally mandated disclosures. Something to think about is anytime you deal with investments, whether that's CalABLE, also if it's a special needs trust that has investments, you want to consider risks that come along with it. Any investment carries some level of risk, and we're no different in that regard. If you go to the next slide, one thing you can think about is we do have an FDIC insured portfolio. It's insured up to $250,000, but that is an option if you want to think about more ways you can protect your assets as well. And I believe that is it. Yeah, no, I hope this was helpful for folks. We had a huge number of people join, so really appreciate it. If you have any additional questions, you can put it in the post-webinar survey. We will do our best to answer them. But really, really want to thank Carmen and Carol from Proxy Parent Foundation for what you guys are doing, because it's amazing work, but also for helping us with this webinar and helping inform everyone about how trust works. So thank you so much for joining us.
Thank you for having us.
And your
Yeah,
partnership.
thank you. Yeah, no, it's been great working with you folks. So, okay, well, thank you, everyone. Thank you for joining the webinar.
Bye.